It's Brian Preston, the Money Guy.
We got a question from Gregory. He said, is term life insurance, which he said will cost him about $500 a year, and disability insurance for $600 a year, necessary for a healthy 24-year-old making about $65K and who's on step 8 of the FOO? I've been told to buy this when I'm young and healthy to save money in the long run. What do you guys think? Is it time to do this now, or should he wait?
Brian, who do you think told him to buy it while you're young and healthy?
Well, I'm thrown off because they said term policy. Because usually that's something that somebody's telling you to buy a permanent policy when they say young and healthy.
He's 24. It doesn't say marital status, children, any of that kind of stuff. All right, so Brian, maybe because we don't know enough about Gregory, how would you answer the question? Because he's asking, hey, should I do this? When does it make sense to buy term insurance? And when does it make sense to buy disability insurance? And then how do you figure out how to go about making those decisions?
Well, let's just talk about the concept of insurance. Mm-hmm. Insurance is supposed to protect you from risk. I mean, this all came about, I believe it was in the 1600s when ships, were starting to go over around the world, and shipping companies were realizing, oh my goodness, with these ships,
if it goes down, I got a problem.
They sink, they're ruined. So they started pulling their risk and figured out it was easier if all the ship owners were pulling their risk and doing. So the concept of insurance was, come out of that. Well, it's the same thing with term and disability. Is that what are your risk and who's counting on your income? Because that's term insurance or any type of life insurance is, hey, you die prematurely. If you're single and you have a few bucks in the bank that you can, bury you or cremate you or whatever, and you're covered, yes, your family and your loved ones are going to be sad, but nobody is left in a horrible situation. So your need for life insurance is probably pretty limited. Mm-hmm. Disability, now that one's a little different because you become disabled. Especially if you don't have family or friends or anybody to take care of you, you're like, well, I need to have enough money coming in that at least I can pay somebody because I'm still here. It's not like I died and they put me in the ground. I'm still here, so I need some coverage. Those are two different and very distinct different risks, but you can start to hone in on the risk element of the decision-making process because term, this is where if you're married, and once you start having children, or you're married and you buy a house and you have a big debt or a mortgage that's sitting out there, you want to make sure that if something happens to you prematurely, that whoever was counting on you to provide the income to cover the debts, to cover the obligations with the kids, that there's actually something there. Mm-hmm. Now, here's the good news, and this is why we do like term insurance, is that need or risk goes away if you're a financial mutant and you're saving over the years. That's why we always talk about term life insurance in terms of, think about it from a timeline standpoint. When you're in your 20s, you probably don't have a lot of assets. When you're in your 50s, hopefully you can self-insure at that point. Disability is somewhat similar in the fact that, yes, it's protecting you from if you become incapacitated or unable to work in your profession or whatever, even gainfully being employed. Can you buy insurance that will protect you? But there will come a point, hopefully later in life, if you save and invest and put that money to work with your army of dollars, that it actually can also help you self-insure.
Two quick financial mutant ways to think about going about purchasing this, because a lot of times with the employers that we work with, they may offer some sort of benefit where I can buy life insurance or disability insurance through the employer. When it comes to life insurance, oftentimes it's worth doing the investigation to see, should I buy this from an outside independent company, not through my employer? Because when you buy through employer, you get put in the risk pool with all of your coworkers. So you might be a young 20-something, 24-year-old, but you might have a lot of 50 or 60-year-olds that are also in that same risk pool. So the rate that you get for life insurance might not be as advantageous as if you were to go out and get that on your own. So it's worth looking at what's the employer cost if I do it that way versus what's the independent cost. Now, disability, on the other hand, might actually be the opposite. A lot of times, you can get subsidized disability insurance through your employer, or if you're a member of some sort of professional organization, like accountants, or like, I think there are some special medical practices that allow unique types of disability insurance, where if you were to go out and buy a policy on your own, it would be more expensive than if you were to go out and buy a policy from that organization or that agency because they get big group favored pricing. So you just want to make sure you look at both of those metrics when it comes time for you to buy either one of these insurances, and you can likely save yourself a couple bucks.
And then, I mean, give me, because Bo, you worked in insurance at a point in your career, term versus permanent, because a 20-something, because we had somebody come do an office tour yesterday, and they said one of the first things they talked about was the insurance and annuity products that were sold to them at the beginning of the career. Because when you start making good money in your 20s, it's only a matter of time before you have a friend or a relative who will say, hey, you know what? You ought to go buy this. How do you know whether you should do permanent insurance or annuities versus like term insurance?
Yeah, the reason we love term insurance is because you get the biggest bang for the buck. If you want to do a fun exercise, go to an insurance quote website and look at what $1 million, you didn't say how much you had, but go look at $1 million term policy for 20 years versus $1 million permanent policy, and you are going to be blown away at the difference in cost. Well, if what you're ultimately hoping to achieve is coverage if you prematurely die, you ought to go look at the term policy, and then you should run some mathematics. Say, okay, well, if I want to be building wealth on the side, what if I just took that difference between the cost of the permanent, cost of the term, and invested that in low-cost index funds or target retirement index funds? I bet you'll be surprised at the outcome after 20 years. So I don't know, unless you have a really unique later in life estate planning issue or some medical condition that's genetically in your family that warrants you getting permanent insurance, I think that in a vast majority of circumstances, term life insurance tends to make the most sense.
Yeah, there's definitely a need for permanent insurance. I've used permanent insurance on a few clients in my career, but make sure you go through the due diligence to figure out, are you the 90+% that would probably benefit from term versus the 10% that needs permanent? Because I know when we see people coming through the doors, I'm not sure the insurance industry uses that 90-10 filter. It seems like everybody who has a pulse and has a decent income ought to be buying permanent. And I'm just saying there might be a little more through the due diligence or decision phase that figures out, what are you buying this insurance? Is it time certain? Is there an expiration date on it? Can you self-insure at some point? And then also realize you're in the messy middle. If you're in your 30s, life is already complicated. You're trying to figure out how you navigate having children, buying houses, and saving and investing for your own financial independence. If all of your money is going towards paying permanent insurance premiums, it makes that messy middle even harder, and you might find that you don't end up in as positive situation as you thought, or as the rosy projections that were presented to you.
Yep.